Alright, let me just test my volume. Okay, give me a minute. Okay, so let's start. Now, let's start off with the monthly chart. Okay. Okay, I don't really see anything here for next week, right? Then on the weekly, we have this candle right here. So I believe obviously the easiest draw on liquidity next week would be this fair value gap. Okay, and if you take a look at SMTs on the daily, ES and Dow Jones made a higher high. Nasdaq was not able to do so. Okay, this is not the kind of SMTs that will indicate reversals, in my opinion. Alright, because I think it should have some form of a retracement and then a higher high, so it will form like a breaker pattern. I think that is more reliable for reversals. Okay, so for example, it will be something like, let me see, yep, so for example, it will be something like this. SMTs on the highs, right, this area here, Nasdaq making lower lows, ES making higher highs, Dow Jones making lower highs. Okay, lower highs, higher highs. So I'm waiting for something like a retracement and then one more time into that high, right, for SMTs to be more reliable. Okay, but do you need SMTs for reversals? No, not really, but that would be a good indication for a high probabilities setup. Okay, so like, let's say for example right here, all indices made lower low, so there wasn't any SMT, but price still reversed, right? So SMT is just like it's more like an optional tool that if you want to use for confirmation bias. Okay, so right now heading over back to the weekly time frame. Okay, this level here will be the drawn liquidity, and I'll be looking at 50% of the range. Okay, 50% of this fair value gap. Nasdaq, as compared to the other two indices, are more bearish. Okay, so right here, as you can see, we are heading into the last week of January, so this would be the weekly low, and right below there we have a 4-hour fair value gap as well. Okay, inefficiency basically. So that inefficiency, I think it's very likely to be the draw as well. If you use the projections from this high to this low, we can draw into this area, which would line up nicely with this inefficiency, and or maybe it wants to manipulate lower eventually. Okay, that will be next month's price action, right? That's what I believe it to do. So opening price of next month, manipulate down into 2 to 2.5 and then continue higher. That's what I'm expecting. Right, so on 6 hours, let's take a look. Right, so huge inefficiencies here, and we have this breaker. Okay, so we might want to utilize the breaker. That will be around 2 to 2.5. Okay, considering Nasdaq is slightly more bearish than the other two indices. Okay, let's take like 3 hours. Yep. So let me just remove this because we are this week has ended, and right now, as you can see, we are above true month open. Okay, so we don't really want to short. I mean, in terms of huge, in terms of trades that are trying to capture the monthly range, you're not trying to swing along above true month open, all right? Or even the true, I mean, even the monthly open itself. Okay, we're above that. We're way above that. So we're just gonna have to wait for next month's opening price to determine if it's going to be bullish or bearish. But when you take a look at the monthly chart, there is this fair value gap down here. Okay, on the monthly chart, there's this inefficiency down here that it might want to reach into. Alright, so that is a variable as well that I can consider. Okay, so back onto the weekly chart. We have this order block. If price is to continue to go higher, this order block should support the price, especially the opening price of this order block. Okay, so I'm gonna mark that out as well. I'm gonna name it weekly order block. Okay, I'm using the opening price because it has a short wick. Alright, and then let's move down into the daily time frames. Oh wait, let me show up visibility, daily time frame. So let's refine that. Now on the daily time frame, we have this swing low here, and we have this level here, and this small little inefficiency that is within that weekly fair value gap, and then we have this order block down here. So this right here, to me, it looks like a more probable area to look for longs for continuation higher. Okay, so let's see what next week presents, and next week it's also NFP week. Okay, so 29 NFP week, and we have FOMC Fed interest rates announcement on 31st of January. Alright, so quite happening for next week. I mean, lots of events next week, and as well as non-farm payrolls. So let's see. The following week after that, on 5th of February, we don't really have any news except for Monday and Thursday. So I think I'm gonna have a huge manipulation week down here in next week. Okay, huge manipulation week next week. Alright, so let's see. Within this area, if there's anything I can utilize. What is this? It's not showing. So the most obvious I'm looking at, it's basically the breaker, but because we have a huge inefficiencies here, okay. This all here is just one-sided delivery, so it might want to come down and reprice everything. Okay, so I can't really call any reversal points from this, from this levels alone. Right, let's take a look at 4 hours, see if there's anything. Okay, from here, personally, I'm watching this order block on the 4 hours. Okay, so 4 hours, we have this order block down here. Let's see if it validates the point. Okay, I'm taking back my words. I'm not gonna use that. So yeah, we'll have to see where we open next week. It's really hard to tell for now, except for this low here. This week's Tuesday low will be the next strong liquidity, and let's try to break it down. How are we gonna get there? So on 1 hour, I'm thinking that this is the proportion on the block. Okay, we are in the last stage of distribution down below this accumulation. So, and we have closed below this up close candle here. I'm thinking that this is your proportion on the block. Okay, I'm gonna highlight it. H1 proportion on the block. Okay, so I'm expecting price to open and then come up into this proportion on the block and then reverse lower. Okay. Next week, Monday and Tuesday would be, I mean, in my opinion, the best days to trade. Wednesday, because we have FOMC in a PM session, so I'm not really looking forward to that. And eventually we have Friday, a non-farm payroll, so interested to see if any movements are presented in Friday. We have 10 AM news as well on Friday, non-farm payrolls. Okay, now with this, I'll be concluding the indices. Okay, let's move into the XY. The XY on the weekly, we have another closing candle above this inversion level. Okay, and obviously, since this candle has closed, I was bullish on the dollar, and it came back all the way down into that midpoint of this inversion and then closed above it. So I believe it's reaching for this buy stops and then eventually filling up this inefficiencies, and at the same time we have a monthly inversion right over here. Okay, on the daily chart, it's just trading back and forth away from this daily BC, okay, which is what you want to see for dollar to take out the relative equal highs up here. Alright, so bullish on dollar next week, bearish on the indices. Alright, next I'm going to move on to HSI. Now HSI is pretty interesting. Right, after tagging this rejection block, price reversed. Okay, right now invalidation will be this swing high, and I want to see next week trade above into this order block here, maybe rebalance this inefficiency, and then continue lower. Because I'm still interested in this low here and this level below the low. Okay, if you take a look at the monthly chart, this is like a flat candle here. Okay, it basically opens and runs higher, right? And we have inefficiencies down here as well. We have this volume imbalance here as well, and on the 3-month, if I'm not wrong, yes, we have a 3-month volume imbalance as well. So I think that low is most likely going to be ran, and then I want to see speed down into this volume imbalance. Okay, that's for HSI. And because we're in lower half of this entire dealing range, I really want to see speed. Okay, so from this swing high to this swing high right here, I'm grading the dealing range. Okay, we're trading below the discount, so we're within a discount of a discount. So right here, I want to see price shows the willingness to really run through with speed, but this is not what I want to see. Actually, I actually anticipated a gap, like a fair value gap between this candle, because this candle broke this swing low here. I wasn't wanting to see something like this, and if that's the case, then this would be the last line of defense, and invalidation will be here. If it wants to do something like a high resistance liquidity runs, it can do so, but I mean, I wouldn't like the price action. Okay, and ever since this period here, I've never liked HSI's price action. Okay, so even when I do not like it, I still understand where it wants to go. Okay, so let's see if this plays out on the monthly chart. Okay, we do have this wick here, and if it wants to provide a high resistance liquidity run, it can run this swing high and then trade into that monthly wick's midpoint. Okay, any closing prices above this midpoint level, it's most probably going to run higher. Okay, maybe into this inversion fair value gap, or even this old fair value gap. Okay, so which is a headache to trade if you're in one for HSI. Alright, so on a daily, okay, let's just take a look at the projections. We have 1 to 1.5, and if it wants to trade higher, to offer OTE, okay, just like Forex, just like what dollar's doing right now, can do so. OTE will be right around here, okay, within the levels that I specified. That would validate the setup to go lower. Okay, still leaning bearish on HSI. Now now we're done with this. Let's take a look at Bitcoin. Alright, so for Bitcoin initially, I think I repeated this many times, but initially I was looking for this lows here to be tagged before trading higher into this buy side. But right now, because this buy side has been tagged first, I'm looking for prices to trade lower. Okay, so this should be the top for Bitcoin for now, and we have resting liquidities within this inefficiencies and this all lows, all equal lows below. So I want to see it run that through. Okay, run through that, and that will be a very nice market maker sell model, the original consolidation. into this high, or maybe even below here, but I think that's a little bit too far-fetched for now, so let's see what it does. Okay, so that's for Bitcoin. Let's take a look at gold. Nothing much really, not too interested, but I'm just looking at it to see if there's anything interesting. Okay, let's take a look at treasuries. So now, interesting enough, treasuries, it's going higher first. Okay, in the first month of January. Right, I was watching to see if it wants to return down into this fair value gap to offer a long, I mean in terms of a trade, to offer a long into this highs here, but let's see what it does in February. Right, I don't like how it's trading above first, because if it is bullish, it should trade below first and then higher. Right, so right now basically my focus will be 50% of the wick here, and that should be interesting levels. Right, let's take a look. Actually, let's take a look. Let's take a look at the 1 month. Yep, we do have this monthly CB in confluence with this midpoint of the wick here on the yearly. Okay, so you can definitely trade above here and then run lower into April. Okay, and then from April onwards it might just reverse and go higher. Okay, so it will be something like this. Alright, on to the lower time frames for treasuries, and if that happens, we are expecting bullish dollar. Okay, so same thing for dollar actually for higher time frame context. So for the dollar, on the higher time frames, we have this yearly fair value gap, and because right here it is basically traded the same way as treasuries, and I want to see it trade lower first before higher prices. Okay, for the dollar, right now I'm looking at this rejection block. Okay, now let's take a look if this has tapped the mean threshold here. Right, wonderful, perfect. So right now I want to see if it wants to overextend into this rejection block and above the swing highs here. Right, that's for the dollar on the higher time frames. Okay, now what else can I cover? Right, so for the bonds, basically it's the same playbook with the dollar and the treasuries, just the opposite. Right, so the bonds, same thing here. I'm looking at this highs. This is a yearly fair value gap, yearly CB, and then we're right now trading down. I really want to see these two up close candles hold the price, and especially this inversion level here. This is the proportion of the block. Okay, and this is an inversion level, so this order block must hold. Okay, I don't really want to see any closing prices below this order block or any aggressive trading through of this order block. Right, this order block should be a form of a strong support. Alright, and it's within the OTE range as well. Yep, OTE. So expecting it to come down to this levels here and then reverse higher. Okay, that's for the bonds. And yep, I'm gonna wrap up this session here, and I hope you enjoyed it and have a great weekend.